this video, we're going to begin to look at a whole new function within a business, the finance function. At its most basic level, the finance function handles, yep, you've guessed it, the finances. Some students believe that the finance function or department is one of the more boring parts of business studies. However, without the finance function, without a clear understanding of the money, a business simply couldn't be successful. It's one of the most crucial elements involved in the efficient management of any enterprise, and the entrepreneur who forgets this is almost destined to fail. Many large businesses will usually have a finance department that will support the business in decision making. They will ensure that every department has the necessary financial information to make the decisions that they need to make when they need to make them. If the marketing department wants to create an expensive new advert, the finance department will let them know if there is a budget available. If operations want to change the materials used in manufacturing, they will need to check with the finance department. And finally, if the human resources department wants to increase the hourly wage for production workers, they will again need to check with the finance function to know whether this is even possible. Smaller businesses may not have a whole department managing finances, but they still have a finance function. Some entrepreneurs have a real strong understanding of their own finances, just like I hope you will after this series of videos. They will use online financial management systems, like for example QuickBooks, to ensure that they have the necessary financial data that they need to make key decisions. For some entrepreneurs, they may choose to use the services of an accountant instead. This is somebody who you will pay to manage all of your financial information and provide you with the key data necessary to make decisions when managing your business. A business must have up-to-date financial information so that it bases its decisions on accurate data. This can include figures on revenues and sales, profit and profitability, and the availability of cash in the business. Different stakeholders, managers, shareholders, investors will require different financial information as they need to use it for different purposes. To all the teachers out there, show all of these videos without any ads and gain access to our growing library of over 500 teaching worksheets. Why not visit BizzWizard.co.uk to find out more? Let's look at some of the types of financial objectives that a business might have. It's important to remember that the financial objectives of the business should be driven by the overall objectives of the business. One of the most common financial objectives is to focus on profit. You know, the money you have left over when you've paid your costs. Sometimes a business will focus on simply being profitable and not making a loss. Or sometimes the focus will be on maximizing profits. You know, making as much profit as physically possible. If a business is profitable, this can help the long-term potential of the business, as some of these profits can be reinvested to help it grow. Let's face it, if a business is not profitable, if it's making no money at all, well, it's simply going to struggle to continue to operate, never mind expand. Rather than focusing on profit, some businesses start by focusing on revenue. This is the financial value of your sales. It's really important to understand this concept, so let's look at a quick example. If I sell 50 pairs of funky socks, then this is my sales quantity. It's the number of items that I've actually sold. Now, if I sell each pair of socks for £10, then my sales revenue is 50 times £10, which gives me a sales revenue of £500. You see, it's the number you sell multiplied by the price that you sell it for. Simple, right? Often businesses that focus on revenue in the short term start by selling their products or services at a loss. Then, once they have built up sufficient market share, meaning that their piece of the pie that is their market has got bigger, well, their focus shifts now to becoming profitable. Did you know that this was Amazon's strategy when they first started? They took the time to build a large database of customers, and to convince them that they could buy anything online as easily and cheaply as in a physical store. They made losses in the early years, but their strategy paid off, and Amazon now has both a huge market share and is an extremely profitable business. There is a saying in business that revenue is vanity, profit is sanity, but cash is king. There are some key differences between these which we will explore in the coming videos. Focusing on cash can be vital for a business to survive. Many profitable businesses have faced difficulties or even gone out of business because there hasn't been sufficient cash available. The finance department can support by preparing documents known as cash flow forecasts, making sure that all the outstanding debts owed to the business are paid on time, supporting the business with negotiating payment terms with its suppliers, and making recommendations about the amount of money that can be tied up in stock. They may also even be able to support negotiations with lenders, such as the banks, to bring more finance into the business. Bring this video and over 100 more to life with fun, interactive games, quizzes, and case studies. Why not try the first 25 completely free by visiting BizzWizard.co.uk. So, let's look at some of the reasons a business might invest more money into their operation. Well, it could invest in its capital, such as machinery, or it could invest in labour, the workers, for example by providing training to its employees. The aim is to improve the productivity of the business, leading, hopefully, to increased profits. Now, businesses need finance for several reasons. It may be to expand the business by investing. It could be to improve the cash flow, meaning greater liquidity, which is basically the ability of a business to get its hands on hard cash. A business could also need finance as startup capital when it first sets up, or maybe money for improving advertising. In this video, we're going to meet Jayne Potter, Head of Finance at Rapid Valley, a popular theme park. Jayne has a team of 10 who look after all aspects of finance for the company. Jayne and her team are responsible for creating reports showing the daily, weekly, and monthly revenues for the theme park, which are all emailed to the management team so that they can see how well it is performing. Each week, her team prepares a more detailed report showing their gross profit by category, visitor numbers, and the average spend per visitor. Each month, the finance team prepares management accounts that show the profit and loss after all costs have been taken into account. They also prepare what we call a balance sheet, which is a summary of the financial position for Rapid Valley and shows what the business owns and what it owes. The finance team also makes payments to suppliers for invoices received, and it keeps track of all the payments made by customers visiting the park. They reconcile, kind of meaning match up, the money shown on the bank statement to make sure that they can explain every payment that goes out and every single receipt that comes in. They prepare the tax return for the HMRC. This is Her Majesty's Revenue and Customs, which is the organisation that collects tax, more simply known as the taxman. Each year, Rapid Valley has to file its accounts with Companies House. As they are a fairly big company with sales of £25 million a year, their accounts need to be checked by auditors, basically professional checkers, who keep tabs on big businesses to make sure that they are keeping accurate financial information. Jayne is responsible for making sure that this process goes smoothly and that her team are available to answer the auditors' questions. The managing director, basically the big boss of Rapid Valley, wants to invest some more money into expanding the theme park. He has two main ideas. One is to add an outdoor assault course with a zip wire that stretches across the local valley. The other idea is to create the tallest water ride in the UK. He knows that he can't afford both, so he asks Jayne for her to help him in evaluating his decision, basically meaning weighing up the pros and the cons of each option. Jayne sits down with the managing director and they work out the investment that would be required for each of the projects, along with the expected costs and revenue from each. Jayne calculates that the assault course option is expected to deliver a higher return on investment, or ROI, basically meaning that this is the option that will make the fattest stacks of cash. So the big boss decides that this is the way to go, as Jayne always knows her stuff when it comes to decisions just like this one. Each of the video courses over at BizzWizard.co.uk also includes an interactive business case study that applies the knowledge learnt to a real-world scenario. There are over 1,000 multiple-choice questions, each with detailed feedback, which tests students' understanding of the content. Why not visit BizzWizard.co.uk to find out more? So let's have a look at some of the advantages to Rapid Valley of employing Jayne and her finance team. Jayne's finance team is a key part in the overall running of Rapid Valley. They provide the information that the people within the business need to do their jobs and to understand how the business is performing. Jayne and her team provide information and analysis to help people in other areas of the business to make decisions and to help advise senior managers of the best course of action when it comes to investments or bringing in new finance. Jayne's team makes sure that all taxes are calculated accurately and are paid on time, that supplier payments are made, and that all money owed to Rapid Valley has actually been received. They also make sure that Rapid Valley stays within the law by filling out the required reports with the company's house on time to avoid Rapid Valley receiving any substantial fines or even bad publicity. But having a dedicated finance team does come with some disadvantages for Rapid Valley. Jayne and her finance team carry out specialist roles, so they will need to be paid accordingly, which will add to the costs of the business. Jayne herself is a qualified accountant, as are a couple of the more senior members of the team. To keep on top of developments in the field, they will need refresher training from time to time, and some of the newer members of the team are keen to study for their accountancy qualifications. This training will cost the business money, and possibly also involve time away from the office to actually attend the necessary courses. A professional finance team will require the right software packages to enable it to accurately capture and report all financial information required to the business, as well as to the HMRC and to Companies House. This will cost money and will likely require specialist IT support within Rapid Valley itself. So, now that we have looked at the example of Jayne and Rapid Valley, you should be beginning to develop an understanding of just how important the finance function actually is. If you get a question on the finance function of a business, it's important to remember that typically only bigger businesses will have a dedicated team. The financial strategy of the business must be driven by the overall corporate objectives, not the other way around. But without management of finances and a thorough understanding of the money within a business, it is unlikely to ever succeed. This has been the BizzWizard. See you in the next video.